Hi guys, welcome back to a BluFX market update. I am Ken Chigbo. You may know me as KenFX Freak via my social media channels. I'm doing another update here, what's going on in the markets on behalf of the BluFX team. So start off, what we're seeing in terms of tone across the market since the open is very much about risk appetite. Okay, markets wanting risk. Now, why is that? Why are we seeing an outperformance in the riskier assets, likes of stocks in Europe and also in the United States, but also in the FX market, some underperformance in the safe haven, the likes of the dollar, while the likes of AUD, NZD, Euro, GBP, all the riskier currencies are outperforming its peer, the dollar. It's because, essentially, before I go through the charts, it's basically we've seen markets are happy, or encouraged at least, that a lot of economies are going to start easing their lockdown measures. So this is great for the economy in trying to cushion some of the blow, the impact from the potential recession, given the large contraction caused by, of course, COVID-19 in limiting output from economies and activity. So this is seen as encouraging for the markets. That's why we've seen some risk appetite. We've seen some pressure to the downside for the Dixie. As you can see here, there's a near-term trend line supporting the price, in which we've broken out of to the downside, inviting a fresh wave of selling momentum, breaking that psychological 100 mark. And, there could be room for some further downside. It's tricky because sometimes the dollar likes to be a safe haven, sometimes it doesn't. And I note that because we've got key data this week. US GDP, really the big factor. We saw the second largest economy in the world, China, reported a huge contraction in their growth. So perhaps we'll see the same with the US, and maybe the dollar will lose some further ground just on that fact. So a bit of weakness being eyed here for the dollar at the moment on this near-term view on the 4-hour. On the daily, you can see things have been shaping up for some further downside, following this somewhat of a shooting star at the moment, looking to be a confirmation with that bearish push lower that we're seeing at the moment. Just going to pick out some of the key ones that we've seen in terms of upside. AUD has been nice. We saw this bull flag last week. So there's been a couple actually. Here's the flagpole. Here's a flag, breakout to the upside, another flag, and a breakout to the upside, inviting some nice pressure to the upside. And the thing is with AUD as well, they've been somewhat less impacted by the coronavirus. They've contained it very well, and a few of their states over the Sunday noted that they're easing their lockdown restrictions, which is good. That's encouraging for AUD. As a view, their peers, Australian dollars, also seen some nice bit of upside, broke out of a near-term flag structure there, you can see, making way for another wave of upside momentum. We also want to have a look at gold, because gold versus its peer, not versus its peers, gold has been bid for over the last sort of week or two, a couple of weeks really, because of it's been benefiting from government stimulus and central bank stimulus. It loves that. When there's money being pumped into the markets, gold tends to benefit. We've seen a nice breakout to the upside here, consolidation, another breakout of this bull flag structure, with still some further moves to the upside being somewhat eyed. There's a top area here around this sort of 1738.40 area. Could be room for a squeeze to retest and push into sort of 1780, just ahead of that psychological $1,800 mark. And lastly, the pound, despite the fact that last week actually the Brexit negotiator in the EU, he said that talks didn't go very well. Okay, and surprisingly, the pound's been allowed some upside. But as I say, that's just on the upbeat sentiment that we've got in the markets at the moment in terms of these lockdown measures being eased, and perhaps that'll be seen for the UK as well. We're at a bit of a crossroads here. Take a look at daily. We've actually been rising for the last 1, 2, 3, 4 sessions. Around this sort of 50% Fibonacci here. Bit of a crossroads. There is room for another squeeze to the upside. Just depends if we're able to break down this area of resistance at the moment around sort of 124.20 to sort of 40.50 range. In terms of this week, guys, just to round off, as I say, few key events to note. We've got the Federal Reserve, the FOMC, the Central Bank of the United States, their rate decision, where they could leave the door open to some further easing if the economy needs it, which may be seen as a dollar negative, dovish. We've also got the ECB rate decision, another big one. Keep an eye on that. Expect some euro volatility. And of course, the GDP from the United States. That is huge. So guys, other than that, that's just a few observations that we're seeing sort of fundamentally, and obviously taking a look there on the charts. Have a smashing trading week, baby. Get it.